Today is Monday, May 16th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the financials this morning, Alan, concern with high inflation has been in the headlines of late. What is the outlook for inflation in the U.S. and globally?
Well, of course, as everyone knows, we have seen some very high inflation numbers in the U.S. and globally, but I'm starting to see some indications that inflation is now peaking, and not just here in the U.S., but overseas as well. So I think if that is the case, I think that means that the central banks that are hawkish now may be just a bit less hawkish, and that would include the Fed, the Bank of England, and the European Central Bank as well.
Alan, the NASDAQ appears to be the weaker of the three major stock indexes. Do you feel the NASDAQ futures will continue to weaken against the S&P 500 and the Dow?
Well, the NASDAQ has been the leader to the downside, of course, for a very long time now, but I'm thinking that that may be coming to an end. Some chart objectives have been hit on the downside in all of the major indices. So I think that the extreme weakness that we have seen in the NASDAQ will really not be there compared to the other indices. So some better fundamentals, I think, would help, but the technical aspects seem to be improving across the board in the indices.
Alan, we had the New York Federal Reserve's manufacturing index coming in at negative 11.6. Are there market implications to this?
Absolutely. It's showing that the U.S. economy is slowing more quickly than many economists had anticipated. I think that's the case also globally. So once again, I think it will affect how central banks are looking at their interest rate policies. So all of the hawkishness that we have seen, I think, may be a bit less going forward. That would also suggest that we may be bottoming. In fact, I am thinking we are bottoming in the interest rate futures markets across the board. Technically, those markets look a lot better. So any shorts you have in the interest rate futures markets, I think, should be covered here.
Thank you, Alan. Steve, grains continue to trade higher. Will this continue?
I think it will. I think that in the soybean market, we're entering a period in which we could see record weekly demand, both crush and exports. Brazil will be out of the market August 1st, and the April NOPA crush will be a record 174 million bushels. In the corn market, I don't think $8 corn is rationing demand. We're continuing to talk about lower South American crops, Ukraine not shipping as much corn. And I think that the 177 corn yield that the USDA came out with was a surprise to the market, as low as it was. But with the late plantings, I think that yield could be lower. In the wheat market, we're just losing supply. India announced a ban on their exports. There'll probably be less Black Sea wheat coming out. And most of your end users, whether it's domestic bakers or globally, buyers are short.
Steve, can you share the support and resistance levels for corn, soybeans, and wheat futures currently?
Well, right now, you've been in a trading range in July beans between $16 and $17. And I think we'll push over that $17 range. Most of the open interest in the long calls right now in July is at the $19 strike price. In the corn, we've been bumping up against $8 for weeks now in a kind of a trading range between 7 and 8. And I think that the biggest open interest in options and corn long calls is at the $9 strike price. In wheat, we're making new highs, limit up today in both Kansas City and the synthetic markets, which suggest a trade over $14. The biggest strike price in the long of the Kansas City and wheat futures is $17. So I think the lack of or lower supply and the fact that we're not rationing demand suggests higher prices.
Steve, what is the suggestion for end users that are not covered for 2022? And conversely, should farmers be increasing cash sales?
Farmer has already a record amount of cash sales on at lower price levels. So I don't think until he gets the crop planted and sees something as far as the yield potential down the road, he's going to sell any more cash. You can feel that in the basis. With Central Illinois willing to pay 50 over futures for corn and similar basis like levels for beans to the crushers and to the exporters. I think that farmers probably should wait and just kind of see if this crop gets planted on a timely basis. End users are going to have to increase cash coverage. I think they, especially in wheat, they were looking for some harvest lows to get some third and fourth quarter coverage done. But globally, everyone is short. And I think that with the war, with inflation, with weather, prices are going to go higher. So an end user should grab coverage now.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.